guys, we've come to Shishawama with the boys. No, alright, we've already just ordered the food. We're just chilling now, and yeah, let's enjoy the night. Alright, guys, our food just arrived. So, Speedy, what did you order?
Chicken shawarma. Chicken shawarma.
Chicken shawarma, and you?
Chicken shawarma.
Chicken shawarma. Let's enjoy.
Let's enjoy one. Cheers out. What's up, guys? We just finished eating, and let's talk about the gold market with Adam and Speedy.
So as you can see, even on the charts, right now gold is making history in the making. 16% drop since 1980.
Yeah, this is the biggest drop we've seen on gold since 1980. And right now, what I'm thinking, the analysis shows that we might see a pullback to the 50% level and a continuation in the sell. Maybe for the first time in 3 years, we're going to see a bearish candle. But let's see, we be reactive to the market and let's see what it gives us. Right. Just chill vibes with Speedy here
At the weekend.
on the weekend.
Trading can change your life. Everything boss.
Not now.
When?
It's not today. So let's break down the gold chart and what do you guys think about this massive daily candle? Do you think this is the end of the bull run? Leave your comments below. It's about a 15% drop, but why did this drop happen? Let me share with you what I am thinking with the research I've done. You can do your own research to verify, and the reason this happened is because of the introduction of the new Fed, Kevin Warsh. And Kevin Warsh is actually seen to be more hawkish, giving the US dollar strength. And if we actually look at the dollar pair, we can see we saw dollar strength on Friday. But adding to this, every time a new Fed has been appointed, you'll find gold selling off or consolidating for the next couple of months. If we look at history, I'm talking about. So you can scroll back on your charts and go and see that. I won't be doing that in this video, otherwise it will be too long. Then also we can see gold was pumping massively with just bullish candles for days and days. Even it's still very overbought in my opinion, and the technicals were screaming for a pullback, and we finally got the pullback in my opinion, as well as people have been massively leveraged, causing a whole deleveraging crash. And if you notice, if you go to the COT data, if you go to my website and go to gold, you can see from the last report they actually closed all their long positions. So a few short positions were closed as well, and you can see the net positions have actually been decreasing. So even from the previous week, we can see I mean the banks and big players and the institutes were actually adding in short positions, and we were going from 251,000 positions and slightly decreasing over the last 2 weeks. And from last week's report, we can see that massive profit taking from all the big players in the field. Also, the whole introduction of Kevin Wash, if I'm pronouncing his name correctly, has brought in bond market investors. Now they feel more trust in the Fed's independency and not being a puppet to Trump. So how you know that? You can go look at the yield, the dollar yield, 10-year yield and all that. I'm not going to pull all that up. You can go look at that. You can search it up, the 10-year yield, and you can go look at that chart. Also, Kevin Walsh is seen as someone who's going to defend inflation and not be a pushover from Trump. Like I just mentioned, he's going to be very independent and making responsible decisions, which is giving a lot of investors and big players more trust in the dollar. And most likely we're going to see it play out in the markets. And with gold, my personal opinion, we are still very bullish. We can see from this trend, this on the daily time frame, we're still very far from it. Like there's still all this. So what we can see in the next coming days is probably something like that, or maybe we might just see a break and consolidation in this whole big price range. We just have to be reactive. From what I'm noticing currently, let's drop down to the H4. We can draw the fib from here to there, and we can consider a possible pullback to the 50% or 60% for continuation in the sell. So let's just see how it plays out. I mean, these candles were very massive, and I'm sure price may fix this imbalance of this candle, maybe form a wick, something like that, and then another candle. Don't mind my drawing. All right, or maybe for the first time we may see a bearish candle on the monthly time frame. We've not seen any bearish candles. I will not count those as bearish candles. Those are like consolidation candles. But maybe we'll actually see a bearish candle, something like that. Maybe it's massive, but maybe something like that. Or maybe we'll see a monthly candle like this. Guys, again, don't mind my drawing. It's not perfect. I'm not an artist. Maybe we'll see a bearish candle like this, which suggests a retest of the 5,000 levels again. So let's just be reactive and see what plays out. For now, my thoughts going into this week is to see this pullback and continuation in the sells. We can also see, which is more visible on a lower time frame. Let's just jump into like a 1 hour time frame. We can also see a trend starting to form, a downtrend. Okay, it's not perfect yet, it's still forming, I would say. We can start seeing a trend starting to form, maybe even possibly a channel, and price may just bounce around in here. But let's just see, let's be reactive and see how price behaves. I will be looking for that pullback and then a sell-off. I'm not very keen to see gold make new all-time highs, but yeah, let's just see what happens in these next coming days. If you are enjoying the content, make sure to leave a like, a comment, subscribe if you haven't already, and see you in the next one.